At the end of Wednesday, markets started panic bidding up. They started to regain a lot of the ground that they lost after the Federal Reserve released their minutes from the December meeting. It was not good news that they heard, but yet the market did not seem to digest it and rather just started going back up. So are we on the edge of a financial fall off, whether that's both the markets and also the economy? We're going to get into that, some of the stuff that's been going on, some of the stuff that's been swept under the rug, because it's not looking really good. We're going to walk through that, employment numbers. We got a bunch of stuff to cover. We're going to jump right into it. Genesis Gold Group is sponsoring this video, and they do a fantastic job moving people from stocks and bonds in their IRAs and 401ks over to physical gold and silver. That is your physical gold and silver, your coins that actually go into the vaults. And when you take distributions out of your IRA, 401k, you can do so in physical assets, get those coins directly out of there, that they do not have to turn in back into cash or anything like that. And this month, in January, there is a free silver giveaway to any accounts that get transferred over to Genesis Gold Group. So if you're 401k or part of your 401k or IRA, we'd like to move over, you can see how much silver you can actually get added to your account by transferring this month. Check down in the description down below for their number. So let's jump into this. We got a lot going on. So 2 p.m. on Wednesday, the Federal Reserve released their minutes. So the report of their meeting back in December before they raised the rates by 0.5%. They raised rates across the board 0.5%, and that raised up mortgage rates, private banking lending, everything went up, and that is considered a kind of a break that's being put on the economy overall. In addition to that, they're also continuing on with their quantitative tightening. They're pulling money out of the markets, and they are basically letting the money they put in treasury bills as well as in mortgages and stuff like that, they're letting those just expire. They're not buying up more to replace them, and so therefore it effectively is that these things are going back onto the market and the Federal Reserve is not buying them up. So it's soaking up cash out there, which generally, as they do this, will eventually lead to a market crash. That's how it always happens. Every time that they start a tightening cycle, it eventually leads to a crash. The question is when will that crash happen? And it could be near. The market saw the Federal Reserve saying, let's tighten, 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 because we need to stop that inflation, which is the right thing to do. But what people don't realize is that one of the worst parts of inflation has been this giant bubble that has been blown up in the financial markets, the stocks and bonds being up so ridiculously high. That's where a lot of the money is sitting, is in the investment sector. And in order for us to really get inflation under control, the stock market and bonds need to get hammered hard. And so that's what we're working our way up to, but stocks and bonds seems to be completely oblivious to this and just pretending like nothing's going on. So we did not see a very strong reaction to this. The markets dropped a bit, but then came back. It seems like the market didn't quite either read through everything or they just started playing the market like they usually do. The question is are they going to digest that information, and are people going to realize, hey, yeah, so the market's going to get hammered here sooner or later, and it looks like it's going to be sooner. Are people going to be ready for that? Are people going to start selling off? That's something that you need to be considering, depending on where your investments are and everything like that. The Philadelphia branch of the Federal Reserve. So the Federal Reserve has all the different branches all around the country, and they come together and have like the joint meetings or whatever. Yeah, it's like tyranny, but like, with branches. Philadelphia branch basically has now admitted that we are in a recession. So if you've been hanging around here at all, you know that we haven't changed our definition of what a recession is. A lot of people have changed it to when my politician is not in office, it's not a recession. When my politician is in office, it's not a recession. That's what it is. And that's not how it works. Two quarters of contraction in the GDP is considered a recession. Quarter 1 and quarter 2 of 2022 were in contraction, so therefore it was a recession. Uncomfortableness. Anyway, so that's facts, but I know facts might hurt your feelings, so hopefully you're not too put off by that. But we're already in a recession. We already know that. Anyone who's objective knows that. But, they're still playing games with it. We're not really in recession. Well, the Federal Reserve has come out. Even they have come out and said, we're in recession. Yikes. And, of course, because you need 2 quarters of contraction, you don't know until the end of that second quarter for sure that you're in contraction. So the Federal Reserve in Philadelphia saying we're in recession now. Also, the Federal Reserve came out and said, hey, those federal job numbers that you're coming out with, they're off by 1 million. Yep. 1 whole million. That's right. Even the Federal Reserve calls out the government on that and just saying, that number is just ridiculous. Companies are also cutting their capital budgets out there. That's what we're seeing across the board. We're seeing tech companies and Amazon laying off a lot of workers. We've seen Walmart rolling out new policies where they're cutting hours to a lot of workers, and they've stopped a lot of the hiring as well. And so we're seeing more and more both the warehouses as well as the stores are being understaffed because they're trying to cut costs because their earnings are down significantly. And we're seeing that across the board. Earnings are down everywhere, and because of that, we're seeing layoffs happening. We're seeing capital budgets cut, so they're not investing. So like ExxonMobil and some other oil companies have just started slashing their drilling rigs and their drilling operations overseas because it's just too expensive. They can't keep pouring money into making oil, which politicians are waging war against. That's just not a good place to be. And with recession looming, because the recession is looming, that means oil demand is going to go down. Energy demand drops when people are all sitting in their homes and not going anywhere because they don't have to drive to work. They're not going to workplaces where they're using up lots of energy to build big buildings, and people can't afford to build big buildings. So there's a lot less construction happening. There's house construction is down because nobody can afford brand new houses. And you just keep going down the list and you just see that there's a lot less money being poured, which is basically a lot less energy being needed. So again, these energy companies pulling back makes sense because they're bracing for a recession. And naturally, before the recession hits, that's when the stock market tends to crash. And we had a little bit of a crash earlier, and we've been kind of drooping. But if you put this in an analogy of 2008, we're right about the time where the real big crash happened. And you can see graphs kind of lining up the stock market today through the stock market of 2008. And it's about now, after you've had some drops in the system, it's kind of taken out the reserves. It's taken out, people are getting more and more wary about buying in. All the people who are trying to buy the dip have already bought the dip, and now they're kind of waiting for it to go up. But when it starts dropping again, those people are going to start panicking and selling. And a lot more people are going to start selling. And that's where you get a crash. When you have a large trigger that like a hedge fund or a number of banks that just start liquidating assets, and that starts triggering margin calls throughout the system. And that's kind of where we are right now. The Federal Reserve just keeps taking more money off the table. It's like a big thing of Jenga, right? A big Jenga set where you're pulling out one block at a time before the whole tower comes down. Well, Federal Reserve's been doing that. They've been pulling out one block after the next, and people have been telling themselves in the market that, well, they're about to stop. The Federal Reserve's going to stop. They're going to pause for a while, and so it won't collapse in the next little bit because they're going to stop pulling money out of the markets for now. They're going to stop jacking up interest rates. And the Federal Reserve just came out just now and said basically, no, we're actually going to kind of keep continuing. We're just going to do it a little slower. We're going to keep pulling blocks out. We're just going to do it a little slower. And, you know, which Jenga block are they going to grab that's going to bring the whole tower down? I don't know. You don't know. But the fact that they're going to keep pulling them out until the tower collapses should be in your mind as you're investing. If you have money in the stock market, if you have a job, remember that if your job is provided by a company that actually is publicly traded, them being part of a stock market crash means that they're going to start cutting significantly the costs and potentially lay off you and other people in your department. So keeping all of that in mind, are we on the edge of a stock market crash? I think we are. It's just define edge. Like this week, possibly. I was a little worried about the Federal Reserve report coming out on Wednesday, and it didn't really have too much of an effect. But sometimes it takes until the day later to do that. So I'm dropping this video before the market opens, and be aware that today could get a little bumpy as people have had a whole day to kind of read through the minutes and really see what the Federal Reserve is saying. And I think that they're not going to like what they see the Federal Reserve saying. And this also means that the Federal Reserve can start talking again. And they continue to not like how much the markets are inflated. So they keep trying to talk the markets down. So they might start doing that again too. All right, folks, if you guys have information you want to pass along to me, you can always email me at poplarpreparedness@gmail.com. We'll have more subscriber reports on updates, empty shelves, and that kind of thing of what's going on in your area. You can always give an update by using the word update and pop it down in the comments section of any video, and I'll see that. Thanks so much for watching. If you found this video useful or helpful, you might want to check out this other video right here. I'll see you there, or I'll see you later. Steve Poplar out.